Joining us on the show right now is Harendra Kumar, Managing Director, Elara Securities. When it comes to this entire picture, Mr. Kumar, this is a very interesting day to be talking to you right now. I quickly wanted to start by talking to you about the focus areas. Do you think it's going to be jobs and MSMEs, or what is it that makes it to your list?
Yeah, I think the first and foremost that people have to understand is with this budget and all the FTAs having been signed, the character of the budget is going to change dramatically. So one level, I think the government will keep the impetus on consumption going. Rural has been suffering a little bit. So I think some monies will be put into the hands of the rural consumers. And India needs to be seen as a great consumption market. So the pivot that the government did last year will continue, and I think incentives on consumptions will flow through. The other side is going to be that the capex, probably will go up by 10%. But I think the large part of the expenditure, the character has to be towards incentivizing, building textile hubs, manufacturing export zones, getting the cost of manufacturing lower, so that we become cost competitive to export to all the markets. I think this is how the character of the budget will be tomorrow.
Well, absolutely, Una. And one thing that is firmly being penciled in right now is a big boost when it comes to defense. That's something that, there's a bunch of speculation about. What are your expectations when it comes to defense as a sector?
See, defense, I think they have created space with respect to rationalizing after the Agniveer scheme, so they get some capacity to spend. But if you look at it, the government, rather than direct spending, will look to is already pushing, the private-public participation. A lot of the original defense work is coming via private sector in partnership with global players. So to expect that they're going to do very heavy level of spending with respect to the government PSU, I'm a little circumspect on that. So I would not be putting my bets on the usual defense names. There will be defense expenditure, but the nature in which it will spend will be different. Rather, I think the government did pivot towards making more shipbuilding. There has been traction out there. Globally, a lot of countries have moved towards having their own flags and home shipping bases. India will provide more for ships. So that would be my guess.
And so look beyond your, regular defense names is the word coming in here. But given that, we're looking at a revenue shortfall as well, will the government also continue with its fiscal deficit path? What are your expectations on that front?
See, fiscal deficit is not such a large issue. We are pivoting towards a debt to GDP framework, right, from direct fiscal deficit. That would mean that we can still manage with our spending without actually, crossing the red lines with respect to debt to GDP. Our center debt is quite reasonable. It is the state debt which is a problem. But globally, people would look at the consolidated debt the country carries. So the worry is not at the center level, it's at the state level, which is a different story altogether. But my guess is that, India has only so much of resources from our organic revenue collection, which is taxes and GST. The key part will come towards opening up of a lot of sectors to FDI. Because that is a key catalyst for the Indian market. So if we expect FDI in many sectors to be opened up, the foreign capital will suffice for our spending needs. So my guess is the key problem for India now is foreign flows and FDI, and the budget should address that and will address that. And I think that should subsume any problem of the ability to spend with respect to our own resources.
Well, let's also talk about the big question now, because, when it comes to tax reforms, is there anything that you're expecting in terms of meaningful tax reforms that could be on the cards when it comes to this budget?
I don't know whether there is any other scope left because everything is beyond the budget. The taxation with respect to income, they keep rationalizing. I think there will be some more angles in which the government will look to put hands into the consumers. But that is in the realm of speculation. The GSTs have been cut, right? So I think the expectation that foreign capital will not be taxed, I think it's a very tall ask for the government to comply with after having taken a different route. So I don't see much on taxation other than enabling some more consumption with respect to the bottom of the pyramid.
And what about intervention when it comes to the rupee? Is there anything that you're expecting on that front as well, or something that could, possibly infuse more FPI flows into India?
Prima facie, Indian rupee is very cheap now with respect to the year. So I think eventually it will find its own bottom. So it's a very short-term problem that we are seeing. I think it should self-correct itself as India fixes its other GDP issues. So which is typically the nominal GDP. We should get inflation back. If this comes, I think the market should come up. Mind you, the Chinese markets and the other emerging markets are already rallying. India is the worst performing emerging market. So this data will feed through to a lot of traders, and I think with the attractiveness of that, the opportunity, the rupee should find its bottom. We're expecting 92.80 to be intermediate bottom, I guess. I think that's about it. So things should improve in a couple of months with respect to the rupee bottom and foreign flows coming back.
Absolutely. And what are your expectations when it comes to Capex spending? Are you also penciling in an increase like a lot of investors, a lot of market participants are?
So 10% is what's I think the market is going with. But like I mentioned, I think that's so much what the government has the ability to do. It's more of catalyzing FDI flows. I think that's what should work, the swing the needle for the market. So a 10% growth in capex is not going to lead to a rally in capital goods stocks. But if you say that we're going to allow foreign participation, more JVs, opening up more sectors, more PLI for sectors that we are going to export to, I think these are the catalysts for a capex rally.
All right then, so with a lot of things covered, we've talked about taxes, we've talked about Capex, we've talked about the entire consumption story as well, but do you also expect that there's going to be a meaningful shift when it comes to ease of doing business? Is there anything on that front that you're looking at as well?
So the ease of doing business, of course, the central government does cut a lot of laws. It has provided, and it keeps, emphasizing but there is a state angle as well. When you want to do business, the center can only do so much. So labor reform has followed. So processes will follow. Just one important aspect will be the custom laws. So along with FDI, the custom laws have to move in tandem. And the Honorable Finance Minister already spoken about it, saying that in this current budget, she will address the custom laws in a very big way. So this again will be to create an ecosystem for exports and for ease of doing business. Yes, so expect a lot on the custom laws.
Right, and so that's something that we're expecting. But one more thing before we let you go is the good news that there is no bad news, because it is being largely touted as a little bit of a non-event right now. The fact that there are going to be no negative surprises potentially, is that something that you think could cheer the markets up as well?
No, not at all. I think, see, it's not about no news being bad news. We want good news. So the good news will come from how the government will pivot towards and manufacturing slash export-led economy. I think the major concern for the market is on the FII flows and FDI. If there are angles that will satiate the market appetite, the market should stabilize and rebound. So yeah, we would want affirmative action on these counts for the market or the economy to show incremental strength from you.